Every 210,000 blocks produced, or roughly every 4 years, the compensation provided to Bitcoin miners for processing transactions is halved. This cuts by half the rate at which the latest Bitcoin is published into circulation. That is Bitcoin's way of utilizing a digital method of inflation that is halved every 4 years before all of Bitcoin is published and in circulation. This program would run until around 2140. At that point, the miners would be paid with payments for the handling of transactions that the network users would pay. Such payments mean that the miners also have the opportunity to mine to keep the network going. The hope is that demand for such payments would allow them to stay small after halving is over. Halving is important as it represents another phase in Bitcoin's diminishing supply of finite. There are just 21 million Bitcoins in the market. Now in 2020, there are 18,361,438 Bitcoins currently in circulation, with just 2,638,562 available to be published by mining rewards. In 2009, the payment for every block in the mine chain was 50 Bitcoins. Following the first halving, it was 25, then 12.5, until there will be 6.25 Bitcoins per block on May 11, 2020. Or place that in another way, consider that the volume of gold extracted from the planet had been reduced in half every 4 years. If the worth of gold is dependent on its quality, therefore the fourth of gold production per 4 years will potentially raise its price. Such halvings decrease the pace at which new coins are produced and thus raising the supply available. This may have certain consequences for consumers, because certain low-supply commodities, such as gold, may see strong demand and drive prices higher. In the past, these Bitcoin halvings were associated with major price spikes in Bitcoin. The first portion, which happened in November 2012, saw a rise from around $11 to about $1,150. The second part of the Bitcoin happened in July 2016. The price of the halving was around $650, and by December 16, 2017, the price of Bitcoin had risen to approximately $20,000. The stock then plummeted over the course of a year from this point to about $3,200, a level almost 400% higher than its pre-half mark. Although this mechanism has succeeded so far, halving is usually accompanied by tremendous uncertainty, hysteria, and instability, and it is unknown how the market will react to such occurrences in the future. Don't forget to like and subscribe for more videos like this.